Join me as I dive into the crypto market and try to predict when the next big crash is coming. Right now, there are warning signs flashing everywhere that a market crash is imminent, and it's crucial that you're paying attention. The crypto market has experienced unprecedented growth in recent years, but with that comes increased risk, and it's essential that you're prepared for what's to come. We're seeing key indicators that suggest a market crash is on the horizon, indicators that I've been tracking closely, and I want to share them with you. The first warning sign is the rapid decline in trading volume. When trading volume decreases, it's often a sign that investors are losing confidence in the market, and that's exactly what we're seeing right now. Another red flag is the increasing correlation between cryptocurrency prices. What this means is that when one cryptocurrency falls, they all fall, leaving investors with limited options to diversify their portfolios. This lack of diversity makes the market extremely vulnerable to a crash. Furthermore, the recent surge in stablecoin deposits is a clear indication that investors are seeking a safe haven. When investors are moving their funds into stablecoins, it's usually a sign that they're anticipating a market downturn. Additionally, the crypto fear and greed index is screaming fear, indicating that investors are extremely bearish on the market right now. This sentiment can be a powerful predictor of a market crash, as it often becomes a self-fulfilling prophecy. Regulatory changes are also playing a significant role in the potential crash. Governments and financial institutions are finally starting to take a closer look at the crypto market, and increased regulation could lead to a significant decline in prices. Market sentiment is also a crucial factor to consider. When investors become overly optimistic, it often leads to a bubble, and we all know what happens when bubbles burst. The current sentiment in the market is eerily reminiscent of the 2017 bull run, and we all know how that ended. Macroeconomic conditions are also contributing to the perfect storm. The global economy is slowing down, and with increasing trade tensions and geopolitical uncertainty, it's only a matter of time before the crypto market feels the effects. One of the most critical pieces of information that I want to share with you is the alarming rate at which institutional investors are pulling out of the market. When these big players start to exit, it creates a ripple effect that can have devastating consequences for retail investors. Another worrying trend is the increasing number of cryptocurrency whales. These large holders of cryptocurrencies have the power to manipulate the market, and when they start to sell, it can trigger a massive sell-off. Furthermore, the blockchain analytics firm Chainalysis has reported that only 37% of Bitcoin holders are currently profitable. This means that a staggering 63% of holders are sitting on losses, and when these holders start to sell, it will put immense downward pressure on the market. The final alarm bell ringing in my ears is the eerie silence from the crypto influencers and thought leaders. When the people who are usually the most vocal about the market are suddenly quiet, it's often a sign that they're waiting for the inevitable crash to happen. In conclusion, the signs are clear. A market crash is coming, and it's essential that you're prepared. Don't say, "I didn't warn you." Thanks for watching, and if you're new here, consider subscribing for more crypto content.